David, and thank you to the organising committee for helping me to reacquaint myself with my Donegal roots once again. And before I formally start, I'd like to make an apology that if anything I says here offends any international rating agencies, I very much apologise for that. And I further apologise for that note of Cork sarcasm. I come from Cork, a county which almost 100 years ago had the Skibbereen Eagle newspaper that was keeping its eye on Tsarist Russia. And I wouldn't like to think that anything I say, either subsequently or in the speech, influences anybody like Moody's agency. But to the subject at hand, in the almost 2 years since the introduction by the government of the wide-ranging bank guarantee scheme, change in the Irish banking sector has been fitful, fragmented and frustratingly slow. There has been change, and much of it has been positive. The chief executives and the chiefs of boards of many of the institutions have moved on. Under legislation passed, the entire board membership of these institutions will have changed within a very short time. Key appointments have been made. There is a new governor of the central bank, Professor Patrick Honohan, with whom I had the privilege of sharing a platform at this summer school last year, along with Alan Dukes. It might offer some succour to my fellow panellists that both were promoted subsequently, even though I wasn't. But that appointment of Patrick Honohan and the appointment of Matthew Elderfield as Chief Executive to the Office of the Financial Regulator are both appointments that are significant as much for the manner they occurred as for the quality of the people who were appointed. Patrick Honohan's appointment as an outside academic being brought into the top position in the central bank broke the Buggins' turn arrangement of the Secretary General of the Department of Finance being assumed into that position. His previous role as a questioning, albeit a constructively questioning outside observer, offering an alternative to, and where necessary a refinement of, government policy decisions, made him an ideal choice for this role. Matthew Elderfield, outside of his obvious experience and qualifications for the role, and the impressive way in which he has taken to his task since his appointment, has one key advantage in being appointed. He isn't Irish. Speaking at this summer school last year, I outlined my position and that of my party that the vacancy of Chief Executive at the Office of the Financial Regulator had to be filled from someone outside of the incestuous circle of Irish financial services and those who had been involved in their regulation. Since his appointment, he has shown a willingness not to pull punches. His decisions on the Quinn Insurance Group and that company's relationship with Anglo-Irish Bank showed an individual with ability to operate beyond political pressures and put prudential principles to the fore. Both Professor Honohan and Matthew Elderfield have demonstrated their desire to operate in ways that their predecessors chose not to. Legislation in the form of the Central Bank Reform Bill has helped to achieve a better balance in the relationship between the Central Bank and the Office of the Financial Regulator. I believe the bill will help the information flow and, more importantly, have the accountability levels better defined. That said, I have concerns that there might be a sidelining of the consumer protection role in our regulatory framework. In putting aside our failed system of regulation, we need to remember that it was the prudential system of regulation that failed us most. Where we identified bad banking practice, it was more often than not through the consumer protection role of the Financial Regulator's Office. We need also to remember that previous legislation, while in balance, contained many powers that were never used, that if used, would have led to the establishment of a more effective system of regulation. With this legislation, there remains a leap of faith that the powers contained within the bill are to be used by those entrusted to exercise those powers. Such people are in place now. We need to ensure that they are there into the future. Where change has been less obvious has been in the subsequent appointments in the executives of several financial institutions. These appointments hardly have a new broom approach about them. Indeed, they have a feel of meet the new boss, same as the old boss. And as we further peel the onion of what has gone wrong in Irish banking, there has to be an expectation that further departures from Irish banks, even among those recently promoted, must be expected. This and other factors feed the cynicism among the general public that change isn't really happening and may never properly occur. Most frustration exists at the lack of prosecutions that the public justifiably believes has been criminal. We can bemoan our legal system, talk about the burden of proof and the need to establish watertight cases, but the longer the period in which no prosecutions take place, the less likely they are ever to take place. I don't see this as political protection of those who need to be prosecuted. It is more of a culture that those who inhabit a certain strata of Irish society committing particular types of crimes are somehow seen as being immune from prosecution. In order to move on as a society and to assist our economic recovery, this is a culture that we need to put it behind us, and soon. We are learning. The model chosen to reveal what has brought us to where we are has itself been slow, but valuable investigations have occurred and are still occurring, and these should help us take on board the lessons we need to learn. The reports commissioned by the Government from Professor Honohan and international experts Riegling and Watson have been models of clarity, and their bluntness has surprised many. Being told that we are mostly responsible for our own economic problems and that the banks have been most negligent in bringing this about implies that there are many who remain in key positions in Irish financial services who have yet to take responsibility for their actions. Further questions have yet to be asked. The appointment of the former Finnish civil servant, Mr. Peter Nyberg, the head of Commission of Inquiry into Banking, with his remit to report within 6 months, will help identify the extent to which Irish banks distorted the system and which of their executives were involved in the making of those decisions. Parallel investigations by the Joint Oireachtas Committee on Finance, of which I am a member, into the policy decisions made by the Government and the system reviews of operations within the Department of Finance should help give us a more complete picture. The Dáil Public Accounts Committee is also playing a valuable role with their scrutiny of the documentation that informed the decision to implement the Bank Guarantee Scheme in September 2008. This scrutiny needs to be more detailed than the superficial analysis that so far has accompanied the public publication of the documentation. The Bank Guarantee Scheme, along with the establishment of the National Asset Management Agency, NAMA, has achieved something of a mythical status as the touchstones of public and political ire. I believe this to be somewhat misplaced. The Bank Guarantee and NAMA are not the major problems we have to face. At worst, they are symptoms of the problem. In reality, I believe they should be seen as responses to the problem. Whether they are structured appropriately is a matter for legitimate public and political debate, but to be misidentified as the core problems themselves is to obscure from proper attention the very real problems that continue to beset Irish financial services. To some, the bank guarantee has been a reckless decision that has put the Irish economy at risk to the tune of some 400 and possibly 500 million euro. In essence, it is an insurance scheme, but in terms of public perception, it has become a bill that is yet to be paid. In hindsight, the need to extend and strengthen the guarantee has been accepted. The best criticism, and this in retrospect can be found in the Patrick Honohan report. He has argued that it isn't a question of whether the bank guarantee should have been extended, it is more of a question of how the guarantee was extended and in what way. The questions we now need to ask are whether all classifications of creditors should have been included, and if all financial institutions should have been included to the same extent. What is clear is that the decision that was made in September 2008 was the right decision that was made for the right reasons, if not on the basis of right information. The review of the guarantee whether the guarantee should be extended is where these questions need to be asked. The genesis of NAMA has had a similar route, I believe, towards misrepresentation. According to its critics, NAMA would artificially inflate the property market. It would overpay for the distressed loans of the banks and it would offer succour to developers. The property market has continued to fall, despite the establishment and the initial manifestation of NAMA, and this gives lie to the first assertion. The talked about 30% haircut on the value of the distressed loans was never realistic, and after the stress testing of the bank's loans book, revealing the misinformation given by the banks, a 49% discount has been far more realistic. The third element of whether developers will receive special treatment from NAMA, time will tell. But indications are that in its initial phase, NAMA will be stricter on those who own these outstanding loans than the banks who issued the loans in the first instance. There remain too many conflicting colossal figures that are feeding public resentment. And perhaps the scale of those figures has led to a sense of powerlessness that tends to magnify the problems even more. However, where anger is more than justified is in relation to the dead money that the taxpayer has been required to pump to Anglo-Irish Bank and the Irish Nationwide Building Society. The cost of these interventions has increased due to the all-embracing nature of the bank guarantee, But what seems to be lost in the argumentation about both these institutions is that even without such a bank guarantee, as licensed financial institutions that were too loosely, if at all, regulated, the state acquires a liability for their negligence. We may be paying more than we need to be, but there has been no other way other than default of avoiding most of the billions upon billions these institutions have cost this country. Increasingly, debate has centred on Anglo-Irish Bank and its future and whether it has a future. Again, a subtext implies that Anglo is being maintained for political reasons. As far as the Green Party, as part of government, is concerned, there is no political purpose for maintaining Anglo-Irish Bank. However, it is to be rebranded for the sake of it being maintained. The thinking behind current policy has solely been based on achieving a minimum cost to the taxpayer. However, we may be coming close to a time when the alternative of phasing out the bank over a shorter time period will become the more cost-effective option. Anglo-Irish is a failed bank, and now notoriously failed bank. The policy priority has to be about cutting losses, not about rescuing the bank in whatever form. The story of Irish Nationwide is one that does not seem to rate as high in public consciousness as Anglo. Yet in proportionate terms, its failure has been far more catastrophic. This was a mutual building society that engaged in lending of a type and scale that was beyond belief. The Commission of Inquiry into Banking needs to ask particular questions of Irish Nationwide. The answering of these questions, I believe, should see those who had responsibility for the decisions and actions of Irish Nationwide have to account for themselves before the courts. In some respects, what my party has argued for in extracting this country from the abyss we have been brought to by these banks is being progressed. The Green Party was the first to call for the resignation of our last financial regulator and his replacement by someone other than an Irish national so that an appropriate distance could be established in our system, or as was our non-system of financial regulation. We also called for a banking inquiry to be conducted quickly, independently, and with large-scale public inputs. As far as we've been concerned, this has been about a process dedicated not only towards getting the right answers, but getting those answers in the right way. Banking policy comprises of three distinct phases, the first of which, the seeking of answers to provide lessons from which we can learn, I've been spending a great deal of time discussing here. The second phase is to move towards getting the banks to engage again in lending and spending activities that will help the economy to recover. In this regard, there has been much legitimate criticism of how the banks are failing to protect homeowners who purchased at the height of the market, or those whose circumstances have changed and are now unable to meet mortgage payments. In the wider economy, there is a continuing problem of credit to small and medium-sized enterprises. Businesses are experiencing these problems at the level of not being able to maintain overdrafts for cash flow purposes, and few seem to be able to access loans for development purposes. My Green Party colleague Eamon Ryan has been working closely with the Minister for Finance to deal with these difficulties. The establishment of the Cooney Credit Risk Review Group has been very much a Green Party initiative. Its recent interim report makes standard practices that have been developing in this area, and it's hoped that the further report will overcome many of the remaining difficulties. It may be that banks by their nature are meant to be cautionary institutions. The recklessness they displayed in recent years could be countered by their belief that in dealing with property, they were dealing with an activity that ordinarily could be described as safe. This culture of banking is one that also needs to be challenged strongly. There has never been a real tradition within Irish banking to support through seed capital, innovation and risk-taking in developing new areas of the economy, and there has never been a greater need to help bring this about. A good example has been the slow availability from the two major banks, AIB and Bank of Ireland, lending to green economy initiatives through the €100 million of such lending that was legislated for in the original recapitalisation legislation. Government policy for economic development is predicated upon the Smart Economy document, and in many of the areas of the new economy, a green economy is being promoted. And this should demand of our financial institutions that they recognise that it's here rather than in property-based economy of the past where investment is needed. The third phase of policies relating to Irish banking concern the structure of the institutions themselves. As much of the attention to date has been in the fire brigade actions to rescue the banking system, and I agree a lot of what Margaret said earlier on this, thought now has to be given to the type of banks we need into the future. The first question that needs to be addressed is how many banks a country of our size needs. The Swedish government, a country with more than twice our population, when dealing with its banking crisis of the early 1990s, was dealing with 7 banks, which it then reduced down to 5. In Ireland, we certainly require a large-scale retail bank. For the interest of the consumer, it would be best if there were 2 such competing banks. Although the presence of other non-Irish-owned retail banks, this may not be as obvious. We need a development investment bank, but one as far removed from the Anglo model as it is possible to be. I would argue that such an investment bank would be a green investment model. The inclusion of such a bank in the new Conservative Liberal Democrat programme for government in the UK shows that this is a direction that is being followed internationally. There are also good commercial examples of these type of banks, and I would instance the Triodos Bank, a UK bank that has already established a small-scale but significant presence in Ireland. Most importantly, there is a need for a small savers, small-scale lending bank run on mutual cooperative principles. We have been badly served by our mutual building societies, but other models exist in this country, such as the credit unions and the Post Bank, which is a decision that I have to state I disagree with members of the Cabinet and members of my own party in relation to. I believe that if a model could be established that combines mutual building societies, credit unions and the network a Post Bank would bring about, then we could have a viable alternative third banking sector that this economy needs. Encouraging small savers and lending in small amounts would just be the stimulus that this economy needs. This third sector could provide the type of small-scale lending that can meet the short-term needs of people who, in turn, by spending more, contribute to the economy more, and in so doing, help create more jobs. As an economy, I believe it would help us become more balanced. A restored banking system depends on public confidence. As of now, we seem to be as far away from that sense of confidence than at any time since the start of this crisis. However, that would be to ignore the work that has been done so far and the analysis of mistakes that have been made and the requirement to initiate a debate about the type of banking system we need and require. It has become something of a cliché that crises help to bring about opportunities, but it is a fine line in which we also have to acknowledge that crises can also help create deeper crises. We shouldn't be afraid to learn from the opinions of others outside the state, those from international agencies who tell us those things we sometimes may not want to hear. Regardless of the fact that in the last decade, many of these agencies have also been caught up in the false euphoria of the casino years in the international economy. The current views of the European Commission, the European Central Bank, the OECD, and most particularly the recent report of the International Monetary Fund need to be heeded. The particular banking recommendations in that IMF report, such as an earlier than thought intended imposition of the bank levy, and an instigation of a new tax on bank executives, which is something that Jim was alluding to, may point to some of the means that taxpayers can recoup the hugely unwarranted amounts of money they've had to commit. We should also give consideration to transactional taxes, such as levies on currency speculation, Tobin tax, or to tax stock exchange transactions. Some of these changes would have to be transnational in their implementation, but some could fit quite neatly into our own system of taxation. Despite coming through the sharpest fall in the Irish economy that we have known, and with it the near destruction of our financial services sector, we cannot now retreat from the requirement that the sector needs a top-down change. That change must include a change of structure, a change of systems, a change of culture, and most importantly, a change of purpose. This won't happen merely because many of us wish it to happen, but we must work to make it happen. If we do this right, we will have a better banking system that will become a more effective hub for our economy. And maybe as a nation we can show ourselves that we are able to learn from our economic and political mistakes. The future of our economy, and with that, that of our financial services, is largely ours to determine. We need to think medium and long term. We need to avoid the pitfalls of knee-jerk politics and the questionable instant analysis of rating agencies. Them again. Better banking is possible. Better banking is necessary. Better banking is what the people of this country deserve. And those who tainted that service must stand aside and allow for better standards to prevail. Thank you for your attention.